I guess the first question is, are we? Have we already seen the best it's going to get this year, Alan?
Well, we're certainly at a point where the market is fully rewarding investors for what's already happened. And when you hear some of the numbers that are coming out, whether it be the Tesla numbers this morning or some of the earnings from Q1, people are still feeling pretty good. But the reality is we think it's going to be choppier going through the end of the year because earnings are going to decelerate. We think the economy is slowing down. And it's just going to be harder for companies to print the kind of top line and bottom line numbers that investors have gotten used to in recent quarters.
I'm looking at here about the small cap stocks, really kind of lagging the large caps last week, but they're keeping pace month to date. What do you think happens? Where does the split come between the large caps and the small caps as we head into the second half?
Great question. We've been watching the small caps very closely because they've lagged most of the year, but they're finally starting to get a bit of a tailwind just in recent weeks. And we think that if we can see the rally broaden out, so the S&P is up almost 16%, the Russell 2000, the small cap index, is up around 8%. We think we could start to see that gap narrow a little bit through the end of the year. And it would be a great sign for the economy because you'd start to see some of these smaller names benefit from what the large cap names have already experienced over the last really 2 quarters.
Alan, I see that a 25 basis point rate hike is your base case coming this July. What after that? What do you predict the Fed will do?
We're going to take the Fed at their word as it relates to being data dependent and a pause after the upcoming, what we believe to be a rate hike. Obviously, they haven't said explicitly there'll be another hike, but we feel after the most recent conference that it's the most likely scenario. And after that, they really want to watch and see how some of the data comes in. So in the coming months and quarters, they're going to be reviewing that data to understand, has inflation finally started to get closer to their 2% target? As we've talked about with our clients for quite some time, inflation took the elevator up and the escalator down, and it's a slow path back down to that 2% target. And we don't think that the Fed is likely to make any material moves other than a 25 basis point move until they know more.
Let's talk about international opportunities here for a minute. CNBC Pro has analyzed the global stock market and come to the conclusion that global stocks have risen more than 12% so far this year, really outperforming the recent performance of recent years. Where do you see opportunity, and how important is China or strategizing around China?
We think China is a linchpin to the overall growth for the economy. And unfortunately, we think that the Eurozone and Japan are going to continue to be weak. We think the data that's been coming out of the Eurozone and the UK with inflation reading higher, with those central banks still behind versus the Federal Reserve, that they have a lot of work to do. And in conjunction with that, when you look at some of the GDP numbers coming out of the Eurozone, such as Germany, it's a struggle. And we think that's going to continue to be a struggle. And on the Chinese side, the most recent data would tell us that they're seeing a slowing. They are trying to find a way to get things going again, but they really haven't found the silver bullet, if you will, to be able to get that economy back where it was pre-pandemic. And so in that type of environment, we want to be underweight international more broadly because we just don't think that investors are going to be paid to wait it out.